Welcome to the end of day review for Thursday, the 25th of January 2024. As usual, we'll start off with the economic calendar. As you can see, there was only USD red folder news. However, the USD red folder news was GDP, and it's of considerable significance, and it means that I don't trade, and you shouldn't either trade prior to this news release. Any open positions should be closed prior to the news release, and um, yeah, just wait for the news to be released and then try and fade the move in accordance with the underlying news release. Unfortunately for today, it was a bit tricky because we also had unemployment claims, which is another red folder news event, and this was negative for the USD. So between the GDP and the unemployment claims, there's somewhat of mixed mixed bias, which is not ideal for our trading because price could go either way. Although GDP probably does hold more weighting, it's tough to decipher if its weighting will actually overbear this unemployment claims news. So, having said that, we know that for the London session there wasn't any significant news, so we were quite free in trading in our London session. Um, but yeah, I think let me go into the charts and then we can have a good review of the day. So from a daily perspective, nothing really has changed from my previous outlooks and end of days. In terms of daily bias candles, there aren't none. Tuesday, effectively reset any bias that we may have been building. So based on that, there isn't really any daily bias to tell us to trade one direction or the other. In terms of the 4 hour, we're pretty much in the same place where we're trading in an uncertain situation where we don't know what is the true market structure. Is this change of character just a liquidity grab to fuel the move and continue the bullish market structure, or will we actually come down, break this void swing structure, and then continue the bearish move? Until we have confirmation, we'll trade with a lot more requirements, and that will protect us from too many losses or unnecessary losses. In terms of the direction to trade today, we had reason to trade both directions. So we had reason to trade short because we're coming off this protein unconfirmed OP, with this substructure low being the ultimate target, and then we had reason to long coming off this primary leg with this being the ultimate target. However, in terms of shorting, we have a significant barrier to overcome, and we have to navigate this quite carefully. So I'll move on to the 5 minute and explain what had happened this morning. So essentially, coming into the Frankfurt session, we had been building the secondary leg. However, we did have this primary OB. Actually, maybe just let me explain why I'm saying this is secondary and this is primary. So we're reacting to a primary 4H OB, so anything developed off this primary OB will be considered secondary. And in terms of this 4H OB, it is the protein unconfirmed because it's part of the leg that actually broke or changed character right here with this body break. So anything that is created from this protein unconfirmed is considered primary. In terms of my rules, I cannot go beyond secondary, so I can't make a tertiary leg, which then means that a secondary leg, once invalidated, is invalid until it is either reset or extended, and I can't build any tertiary legs from there. So having said all of that, coming into Frankfurt, we had the secondary leg, but we also had this protein primary leg with these primary 5 minute OBs that were unmitigated. As you can see here, we reacted really nicely to this primary OB, and then what you can then see from then is that we had this chock right here, at which point I set my entry based on this potentially being the high of the day, and I entered right here, but you can see that was an instant loss. It certainly fit my plan, and I'll take the trade over and over again, but unfortunately for today, it simply meant that we were a bit too early for the shorts. As you can see, the shorts then went higher up and then subsequently materialized later in the day. Then once that loss was taken, okay, so this is a secondary leg. Once that loss was taken, we then extended this secondary leg further, which then meant that, which essentially meant that we could continue longs, and I was happy to take a long. However, it didn't align with the discount factor for my FIB anchoring. So my FIB is aligned to the extreme, and then obviously the low of the day, which is the extreme of the secondary leg. Unfortunately, this POI, which is a supply demand flip, I should probably highlight this supply demand flip. Unfortunately, it doesn't line up with my 38% level, and while I could potentially set a position like this, which would have been fine, the stop loss is quite big, and given that GDP is coming up, it's not ideal. So I'm sitting with this loss, and at the time, emotions are a little high because I mean, taking two losses. Well, yesterday I took one loss, and now today I took another loss. So that tends to play on your mind, and I was considering just entering like this, but I decided against it, especially with GDP news coming up. Like the likelihood of price actually, moving up 2 or 3 hours to actually close before the news release was slim. So I decided, okay, if I'm going to enter, I'll rather wait. Also, the other thing to factor is that once price comes in wicks this level, then we're sitting in a situation where now we've got this secondary leg invalidated because a new secondary leg has been validated, and then of course we've got to consider if we want to short from here, which would have been valid and I would have taken that, but there was just a little bit more to consider. So if that was going to be the case, I'd rather be entered closer to this 38% level, so somewhere around here, and then try and play a hedge where I take longs and shorts, except one loss if it had to be, and then obviously try and close this around the lull to pay myself, effectively covering the loss from this morning and the loss from here. But yeah, that could have went badly either way, because if we waited for the lull and this was too low, then you're still gonna take one loss. So I just decided it wasn't worth it. So that's how I approached that. And then obviously coming into the London session, by the time you're in the lull, you certainly don't want to take any trades, because we are quite close to the GDP news release. So we waited for that release, and unfortunately, although we reached our intended target, which was this, remember also the only reason why I'm shorting is because I do have IRL right here, and we've built this triangle, so there is space for price to move without being considered trading against a major barrier. So the news release came out, we had a phenomenal week that came and reached our targets, and then obviously at that point any shorting was invalidated, because now we essentially trading against a 4H OB, and we need to develop a new leg with new IRL. As you can see, this was the leg and it hasn't developed further, so any further shorts do not make sense. And then from a long perspective, we've got this New York low of the day right here, but because the news is mixed, we don't really know which way will actually follow through. So because of that, it's probably best to just stay out of the markets, because it's possible that GDP will override unemployment claims and then will actually come and use this as further liquidity, in which case it's not smart to maybe take this long. Yeah, it's quite challenging. And then again, in terms of this leg right here, this would be your chalk OB, and we didn't break it. So there's a couple of factors to consider in terms of trying to build that new secondary leg, because essentially when we came in week this, we reset the secondary leg. So it's possible that we can build a new secondary leg, but like I said, the jock is sitting right here and it hasn't yet materialized. um, yeah, so, and then again, you got this New York low of the day. While it is a wick, it's still a New York low of the day, and you don't really have direct support for it. So it's questionable taking a long from that point. So at that point, I decided, okay, um, I'm done trading for the day. I accept the loss, and tomorrow is another day, and we'll hopefully catch a nice long or short, depending on how this develops any further. Of course, tomorrow we'll also have to take into account any weekly bias. However, looking at it right now, Tuesday put in the low of the week, Wednesday put in the high of the week, Thursday didn't do anything, so our weekly bias will probably be neutral. And then from a daily perspective, we don't have any daily bias. So Friday will enable us to trade both directions, and we'll just make sense of the PA at that time and then trade accordingly. Other than that, I hope you had a good trading day, and we'll chat again for tomorrow's London outlook.